Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, November the 3rd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today in the form of across the pond. All we really got was the bank rate for Great Britain came in line with expectations at 0.25%. European unemployment rate came in right in line with expectations at 10%. And we had Great Britain services PMI come in slightly higher than expected at 54.5. So anything above 50 on the PMI numbers is expansion in the economy. Here in the United States, we got unemployment claims, which was 265,000. Unemployment claims higher than the expected, being not that good. A lot of people starting to look for work as they're starting to hear a little bit of rumblings about the overall economic picture looking better. And non-farm productivity came in at 3.1%, which was expected to be 1.1%, and that is not good. We don't want to see that one rising. Also, we got unit labor costs come in lower than expected at 0.3%, was expected to be 1.6%. Now, this is something the Fed really wants to see, is some expansion in labor costs. They want to see the laborer being able to garner more money for their work. So if that happens, then we could start seeing a little bit more inflation in a good way. That means that buying power, people driving demand will increase prices due to that demand. So it's hard to really get that when we have really low labor cost. As labor cost goes down and people are fighting, willing to work less for the same job, then they don't have that buying power or strength. So that's what that number is, and did not come in very well. We also got final services PMI here in the United States right in line with expectations at 54.8, and PMI is Purchasing Managers Index. Anything above 50 is expansion in the economy, which we've been seeing quite a bit of lately. We also got ISM non-manufacturing PMI come in at 54.8, which is more widely looked at by the Fed and economists. Came in at 54.8, was expected to be 56.2, so slightly lower than expected. Factory orders in line with expectations at 0.3%. And finally, we got the natural gas storages coming in line with expectations as well at 54 billion cubic feet. So all in all, a mixed bag for the most part on the economic front. Crude oil, though, continues to slide with that massive build we saw yesterday from the DOE, Department of Energy, and down rate was just below $55 a barrel as soon as I started going on here, but testing that 50 Fibonacci level, the 50% retracement level. On to gold. Gold continues to push higher today, despite the fact that it is slightly down now on the day, but was up much better earlier on today. But the key thing to note now is that it is back below right now the $1,300 an ounce, troy ounce mark. So that is a big psychological level. Just below that, as you can see, is the 50-day moving average. On to the bonds. The overall bond market's coming off a little bit, down about a half a point on the day, but still trending sideways for the most part. It is in a downtrend, as we can easily see, it's in a downtrend, but it kind of officially becomes a downtrend if the 50-day moving average, this purple line, crosses under the orange line, which is the 200-day moving average. That looks like it is going to be happening relatively soon, probably early next week. The overall market, though, I continue to see pushing sideways here. The Fed came out with interest rates to be unchanged, I think a little few of them were a little bit more hawkish than we've seen, but at the end of the day, I don't think they're going to raise rates going into a holiday season. Equities, Dow Jones Industrial Average yesterday came down, tested that 200-day moving average, and it held. Good news for the bulls. That was a line in the sand that they needed to hold on to, but the Dow Jones Industrial Average actually up 29 points on the day. Then over the Nasdaq, we have them negative on the day, but down only 3 points on the day. Looking like they are trying to hold some support here right around this area. E-mini S&Ps positive on the day, up 3 points on the day, but below that 200-day moving average I talked about yesterday. We just started sliding late in the day and finished below that 200-day moving average. Today we are testing that to the upside, but it is holding as a resistance. Anytime a line like this 200-day moving average acts as support for the bulls in that time, once we get below that, settle below that, it will act as resistance trying to go up. So it is a arduous task at best for the bulls to get back above that. Here's a 15-minute chart of the E-mini S&Ps. As you can see overnight, over the economic data that we got across the pond, which wasn't really that bad, but they really sold off on that. Overall market started rallying when the Cubs started winning the World Series. So that was huge news. Happy for all the Cubs, 108 years of drought for the World Series. Won the World Series last night, and probably one of the best 7-game series I've ever seen anyway. But I'm a little biased. I am a Cubs fan, so go Cubs, go. Then on to the overall markets that I've traded today. AIG, this was a loser, so I had on a put spread in there, and it wasn't working out, so I decided to let it run through the earnings call there. And with AIG, I had on the November 55.60 put spread. Actually, I sold the 60 puts and bought the 60 puts, sold the 55 puts to help finance that. So it was a debit spread that I originally paid $1.39 for, and I was able to cover that off of that move today for $2.39. So that worked out quite nicely. Sometimes when it's just kind of not working for you, you just got to let it ride, and that's what I ended up doing on that. I thought when I bought that put spread that I would start seeing volatility expand and maybe get a little directionality on it heading into that earnings event. Didn't really see a whole lot of expansion and volatility, but today on that move I ended up getting my direction quite nicely, so that ended up turning into what was a loser yesterday to be a nice winner today. Then Adobe, similar situation where yesterday it was looking a lot better. Today I decided to pull the ripcord on it. It's been a loser for quite some time. Once we got down yesterday, I really was thinking about covering it. Actually thought about covering it the last couple of days, but just wanted to see if it was going to go down and cover, this gap in here, which today started rallying back, and decided to pull the ripcord on that. So in Adobe, ticker symbol ADBE, I had on the November 105, 110 put spread. Again, it was a debit spread, looking for directionality on that after it had basically started to look at new highs on that. And I was tested on my long puts that I had bought when it went above that 111 area, as you can see, the 52-week high, but got the directionality overall going down and decided to cover that, which I originally paid $2 for, sold it out for $2.49. 25% profit on that. It was a little bit better yesterday. It was probably almost a $3 trade yesterday at some point. I think it was actually $2.70 something, $2.80 at one point at the best point. But picking bottoms is all you get is stinky fingers sometimes. Well, yesterday would have been a nice day to pick the bottom on that one, but didn't quite happen. Then on Lilly. So Lilly, I am short some calls in there, and I'm actually short the November 82.5 calls. So today, with the big sell-off, volatility really expanding on me, just got the directionality nicely, but because of the expansion of volatility. I'm just not getting that decay that I want to see. So I decided to take advantage of some of the higher implied volatility and create a strangle with that, and went into the December and sold the 65 puts in there for $1.46. So now I've created a nice big wide strangle in there, and when I get the volatility contraction, hopefully I can get a nice profit on that rather quickly. So that's what I'm looking for on that. You know, that's what happens when you think you have high implied volatility, but volatility expands. You get the direction right, but you don't really get the fruits of your labor, if you will. So hopefully that when all that volatility comes out and I get some volatility crush, it looks like it's starting to turn over, I can get a nice trade on both sides of that. One thing that I got yesterday late in the day, and you can probably get it better than what I had done with here, was in Lululemon, ticker symbol LULU. I decided to take it off. It just wasn't really working, and I had on the November 52.5 puts in there, and I originally sold those for 80 cents. Decided to cover them back yesterday for 58 cents. So nice profit there. Not exactly what I was looking for. I usually look to get 50% of my max profit on that. Probably closer to that 50% of max profit today. I think it's trading around 40 something probably with this sell-off and with the decay that's happening there. So if you still have that on, that would probably be the time that I would look to take that off. That's all I got for you guys today. Sorry I ran a little bit long, but tomorrow's webinar is going to be on the long straddles. We're going to be talking about when to put that on. You know, it seems like a very easy concept, the long straddle, you're selling the same strike, but I have some rules to go around that to make sure that you have a higher probability of success, and I'll talk about all of that, how to take it off, when to put it on in that webinar tomorrow. So check it out at protraderstrategies.com, and if you can't take that, take it easy.